All right, welcome. Today, we are diving deep into something that runs the entire world of business, but you probably never see it. It's the official rulebook, the language of money, really. And if you want to understand how companies really work, you got to understand the rules. So let's kick things off with a simple question. What would happen if there were no rules at all?
Just picture it for a second. What if one company could just, invent its own rules for reporting money? Maybe they count sales they hope to make next year. And then another company only counts the actual cash they have. I mean, it would be complete and utter chaos, wouldn't it? How on earth could you compare them? Who would you trust?
And that is the heart of the problem. Without a shared rulebook, you get something people politely call creative accounting, which, let's be honest, is just a nice way of saying companies are fudging the numbers to make themselves look better. And it completely destroys investor confidence. It becomes impossible to tell if you're comparing apples to apples or, apples to oranges. Trust just, poof, it's gone. So to fix that exact problem, India created its own official rulebook. They're called the Accounting Standards, or just AS for short. Now think of these as the absolute fundamental laws for how money is reported in the country. They tell every single company exactly how they have to recognize, measure, present, and disclose all their financial info. No exceptions.
Okay, so what are these standards actually trying to do? Well, they have three main goals. First, standardize everything. That means everyone has to calculate things the exact same way. Second, require disclosure. This forces companies to show their work, basically, to reveal stuff they might rather keep hidden. And when you put those two together, you get the holy grail, comparability. It's what finally lets you look at two different companies and know for sure that you're making a fair apples-to-apples comparison.
So you might be asking, who actually writes this rulebook? It's not like it's some casual handshake deal. Oh no. In India, the official body is the Accounting Standards Board, the ASB. It was established way back in 1977 by the Institute of Chartered Accountants of India. And that's important because it gives these rules some serious teeth, some real credibility.
And listen, these rules aren't just cooked up in some back room somewhere. It's actually this really rigorous 8-step process. I'm talking study groups, drafts, public comments, the whole shebang. The key thing to remember is that every single one of these standards has been poked, prodded, and seriously battle-tested before it ever becomes law.
So, after all that work, what's the result? Well, it's a number, 27. That's how many core accounting standards make up the rulebook for business in India. And each one deals with a very specific thing, like how to value your inventory or how to report your revenue. It's all designed to keep things consistent and transparent. Okay, so we've got a solid rulebook for India. Problem solved, right? Well, not quite. Because business today isn't just local, it's global. And the minute companies and investors and money start crossing borders, well, having a different rule book in every country creates a whole new kind of chaos.
And this isn't some abstract idea. It's a real-world problem. I mean, think about it. How can an investor, let's say sitting in London, fairly compare a company in Mumbai with a company in Berlin? If they're both playing by totally different financial rules, it's just an impossible comparison. The chance of getting it wrong is massive.
So what's the solution to a global problem? You guessed it, a global solution. Enter the International Financial Reporting Standards, or IFRS. And the idea here is, it's simple, but it's huge. The goal is to create one single set of high-quality accounting rules for the entire planet. A true common language for business everywhere.
Right, so when a country decides to get on board with these global standards, they basically have two choices. They can choose adoption, which is pretty much a direct copy-paste of the global rules. Or they can go with convergence. That's where you align your own rules with the global ones, but you make some local adjustments, to account for your country's specific laws or economy.
So, which way did India go? Well, India made a really strategic choice. It chose convergence. It didn't just copy-paste IFRS. Instead, it created a new, harmonized set of rules called Indian Accounting Standards, or IND-AS. So think of it like this. IND-AS is basically IFRS, but it's been specifically tailored for India.
And how did they do that tailoring? They used two cool little tools, carve-outs and carve-ins. It's pretty simple, really. A carve-out is when India takes a piece of the global rule out because it doesn't work with local laws. A carve-in is when India adds a little something extra that wasn't in the original. It's how you make the rules both globally understood and locally relevant.
So you might be thinking, why go through all this trouble? Well, the payoff is absolutely massive. When Indian companies align with global standards, they suddenly become way more understandable and more trustworthy to investors all over the world.
That makes it easier for them to get funding, it boosts transparency, and, yep, it finally solves that whole Mumbai versus Berlin problem we talked about.
And really, the whole argument for this massive global project is summed up perfectly in this quote. It says that having tons of different accounting standards around the world is just against the public interest. It's confusing, it's risky, and it breaks down trust. The only real fix? A single set of global standards that everybody can count on.
So we've seen this incredible journey, right? From total local chaos to a structured national system, and now to a smart, converged global framework. But you know what? The story isn't over. As business and tech evolve faster than ever, you really have to wonder, what's next? What will the next generation of these financial rules even look like? And that is a question we'll all have to keep an eye on.